Edward Stevenson, TimelessWealth.net, and the following is basic technical analysis on Washington Mutual Incorporated, traded under the symbol WAMUQ. Coming off of Friday's trading session, we formed this hammer-like candle bouncing off of the low on the day, 1502, whereby the bulls pushed the price up towards the end of the trading session to close at 16 cents per share. Now, in terms of critical support, I am looking at the 15/14.3 area. So let me explain. This trend line right here represents support. However, the key level that I'm looking at is actually depicted by the 100-day simple moving average, this white line right here. So anywhere in between 14.3 of a cent and 15 cents would be considered a supporting zone, perhaps an area where some traders or investors who might right now be wondering, well, where do I accumulate in the event that there is a reversal in trend? Well, this might be a potential area to consider. So again, anywhere between these two trend lines, let me just draw the second one in, somewhere thereabouts. That would be an ideal level for the price to bounce off of and again reverse in trend in the event that that occurs altogether. Now, as you can see, the 100-day simple moving average, why do I mention that it's key? You can see the price retraced here from a high of 14.6 of a cent all the way to 7.3, and you can see it clearly bounce off this white line, again the 100-day simple moving average, once, twice, and even a third time here. So this line has held strong for quite a while now. I really can't see where the price has sunk below it, if ever at any point in the past probably 6-7 months. So this would be a key level to watch for. Hopefully it doesn't break below it, and this is a zone that is held quite well by whether it be longs or swing traders or any other interested party willing to see the stock reverse its trend. In terms of resistance, we are looking at quite a bit of resistance at this line right here. So let me just indicate that in red to represent resistance. I would judge this about 19 cents. Also the 50-day simple moving average right here, so reference top left hand corner, followed by the 20-day simple moving average, or rather the 10-day simple moving average, the blue line at just about 20.4 of a cent. And in between these two marks, I would consider it a resistance zone, just as I had considered in between 15 and 4.3 of a cent a supporting zone. So this might be the profit range where swing traders and or intraday traders will look to perhaps flip the stock and occur some sort of minimal gains, because after all, this is a pretty significant range where there isn't much resistance nor support, and this might be something that some people look to take advantage of. So scrolling down to some of the indicators here, you can see that they all more or less paint the same picture. The stock is oversold and we're looking for a rebound at some point in time. Again, that's why we're referencing supporting levels, supporting zones, whatever you want to call them, in the event that things turn around and the stock reverses its trend. Obviously at this point it was driven by some sort of fundamentals. However, breaking one resistance level after another, we saw that eventually technical traders started catching on, and likewise I'm sure that more than a few are watching for a potential bottom to this current downtrend. Once again, this was Edward Stevenson from TimelessWealth.net. I would encourage you to subscribe to my free newsletter for overlooked trading and undervalued investment opportunities. Again, have a look at my site, TimelessWealth.net, and I thank you for listening to this video.